Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Market turned in a good January, and then, as February began, hit the 14,000 level on the Dow Jones Industrial Average. So what exactly is propelling this market is what everybody wants to know. We're going to see if our strategists here can give us some answers. Value stock strategist Tracy Reinick, ETF strategist Eric Dutram, and market technician Kevin Matris. Tracy, you say it is nothing but purely momentum.
It is. That's what I think it is. And now we're starting to see some of the not dumb money, but less
you can say dumb
intuitive money.
Less sophisticated.
Yes, coming in because we are starting to see, but I'm waiting to see if it continues, bigger flow of money into mutual funds and stock ETF funds that we weren't seeing for the last couple of years, because once you get these headlines, new highs, and I saw the Barron's this week, and it's kind of the Barron's indicator, and it was talking about the high on the Dow and if we're going to get there, and it really is about the Dow for me. I know other people and professionals watch the S&P 500, but the average investor watches the Dow, and now when we hit these levels like 14,000, people are, given what's happened the last 4 years, they turned off on stocks, but now they're sitting up and noticing, hey, maybe I'm missing out on something. And I do think that's going to keep propelling us.
Kevin, you're on the momentum wagon as well. What about Fed activity, Fed keeping interest rates low? Is that like keep filling the punch bowl for the stock market?
The Fed has really been behind this rally from the very beginning, 2009, and they continue to support the market. But if you take a look at what's really happening, sure, everything looks good in the U.S., but if you look elsewhere, right, things are better in China than what people had been expecting. For months, everybody has been waiting for this hard landing to finally take place in China, and now things are ticking up, so it looks as if the hard landing has once again been postponed. If you take a look at Europe, things are better there too. Nothing is good in Europe, but if you were to take a look at what's happening now in Europe and then remember what everybody thought what Europe was going to look like now 3 and 6 months ago, it's night and day. So all the whole world economic picture looks much better today than what people had thought it was going to look like 3 and 6 months ago.
So as a technician, do you see any resistance around this 14,000 level?
There definitely is going to be resistance. Looking at the S&P, I think that it almost seems like a magnet. It wants to get to 1565. But if you look at the levels on the S&P, if you look at the levels on the Dow, it's only really an extra 4 or 5% from where we are today. Now, granted, that could represent an additional 10, 15, 20% in individual stocks, but it just seems like the market wants to keep going up.
Eric, everybody keeps asking also, is this bull run topping out? You say yes.
Well, I think we got maybe 2 or 3 more percent to go. Maybe we'll hit that 1565 level, but there's starting to be some serious concerns I'm having, at least on the consumer front, with the higher taxes. Gas prices are starting to go up a bit. And then also we're going to have the sequester, which I think is probably going to happen. So all these factors could combine to really hurt the consumer and kind of top out the market in the near term.
Yeah, you say it's just been too easy.
Exactly.
Up to this point, things just can't be that easy.
Exactly.
We had an employment report on Friday. Wasn't really overly good, wasn't too bad either, though. It was kind of ideal for the market, right?
Well, go ahead.
And we saw some huge revisions in the, I think, November and December numbers, and that really signaled to a lot of people that, the jobs picture is starting to improve, at least a little bit.
Right. 166,000 new private sector jobs, that is pretty good. It missed the 185 consensus. It missed the lofty 192 that ADP had everybody looking forward to.
Right.
But it was a good number. And if you look at where the jobs are coming from, it's pretty much widespread. Construction is leading things. Healthcare was a contributor. Retail services has been and continues to be a contributor. And you actually saw the manufacturing sector add jobs for the first time in a while. That's been kind of dogging it for quite some time. So they actually participated. So things are looking better on the jobs front.
And as we record this segment here on the morning of February the 4th, some concern over political uncertainty back in the Eurozone has reared its ugly head again. But Tracy, you say it's nothing to worry about.
Yeah, we know they're messed up over there in a lot of ways, and we've been kind of just on a lull with the Eurozone crisis that
Right.
we've been talking about every day, it seemed like, for years. But you knew that it was still lurking out there, and it could come back to haunt us. But this particular crisis doesn't appear to be the same as what we had before. These are more limited to actual individual countries and political situations within those countries, not the greater Eurozone issues and debt and things like that. So while their stocks are pulling back a little bit, it is influencing our markets a little, but they're at record highs too. I mean, the DAX is at like 5-year highs too, so they've had quite a run too. So maybe we're going to get a little pause here based on these few blips, but this isn't the greater Eurozone crisis.
The thing is with the market, this recent rally has been met with a tremendous amount of skepticism.
Right.
But bull markets react bullishly to bullish news and bearish news, and bear markets react bearishly to bullish news and bearish news. So until the market starts reacting bearishly to bull and bear news, or at least bear news, this rally is just going to continue to move higher. But you have to look at how the market starts responding to the new news that starts trickling in.
So then does the January effect predict the market for the year? I mean, it's certainly not the Ravens win in the Super Bowl because they're an AFC team, so it can't go by that.
It'd be hard to extrapolate a spectacular January for the rest of the year. We've already seen how goofy things can manifest themselves, but we're off to a fantastic start. And without looking too far into the future, I think that you just have to keep on riding the bullish momentum, but be very, very cautious and be very, very focused on how the market reacts to bull and bear news from here, and also pay attention to consumer sentiment.
Well, Eric is skeptical of the January effect because he said it's been too easy up to this point. So.
Right.
Tracy, what do you think?
I do think it feels real bullish here, and other years when we've had super good Januaries, the year at least has finished in the green. You don't know if you're going to get double-digit gains or anything really crazy, but usually you do see a gain that year. So, I like where we're going, and yeah, you can't fight it right now.
Okay. And by the way, technically, we're talking about all these things about looking how the market reacts, but take a look at distribution days too. When you finally start to see the market go down, put in a lower close, and you see a pickup in volume, then you have to look for follow-through distribution days, but we have not really seen many distribution days throughout this entire run, so that's another thing you have to look at technically.
I saw Tracy's last sentence in her commentary for her service. Let's just go along for the ride.
That's right. You can't fight it right now.
Thanks for that. And we will have top stock picks from these folks. So we're going to give you some time to click over to the next segment and Kevin some time to clear his throat.
Sorry about that.